Okay, so remember this ledger shows the accounts that are listed. Remember, they're listed in the order you would show them on a balance sheet. So cash, supplies, prepaid, insurance, and equipment would be the order of the assets on a balance sheet. Um, Notice that all of these accounts, the cash, supplies, prepaid, equipment, insurance, and equipment account, all have balances on the debit side, right? But then if you look on the other side, we have notes payable, accounts payable, unearned service revenue, and even common stock. All their balances are on the credit side. Dividends have balance on the debit side. Revenue has balance on the credit side. Your expenses have balances on the debit side. How do you know all the debit balances and the credit balances balance? How do you know that? Well, that's what Learning Objective 5 talks about. We are introduced to something called a trial balance. And a trial balance basically makes sure that the ledger balances are balanced. I know that seems a little bit weird. So here's an example of the trial balance for Sierra Corporation that I just showed you the ledger for. Here are all the accounts listed in the exact order you saw them on that ledger, okay? And then if like cash, supplies, prepaid, insurance, and equipment are all asset accounts, they all had debit balances, so their balances will go in the debit column. But as you know, the payables, unearned revenue, and common stock all have credit balances, so their balances go in the credit column. Dividends in the debit column, revenue in the credit column, and your expenses balances are all in the debit column. Simply add them up. Your debit balances and your credit balances should equal. And that's a trial balance.
On the ledger, are the asset accounts listed in order of liquidity, or
Yeah, the exact same as they would be on a classified balance sheet. Yes, absolutely. Yep, exact. Um, but here, when we actually have a ledger available to us, that ledger already tells us the order of the accounts. So we simply are marking down the accounts in the order we see them in the ledger. All right, so that makes it a lot easier. Okay. Your book gives you a do-it exercise on a trial balance, except they don't give you the order. They want you to put it in the order. So I'll show you how to do that as well. And just like Zach was talking about, is it the same as on a balance sheet? Yes, classified balance sheet. So they give you all these accounts, and where do you start? Well, a ledger will have an order like a balance sheet. Assets are first. So pick out your assets, right? You have equipment as an asset account, accounts receivable as an asset account in this column. In this other column, you have prepaid insurance and you have cash. These are asset accounts. Now, all of the asset accounts are identified. What order would they be in? Cash would go first, accounts receivable would go second, prepaid insurance would go third, and equipment would go fourth. That's how we would see them on a classified balance sheet if those were the only accounts. So the balances that they give you here would be on what side of the account for all of these assets. They would all be on the debit side of the account. So when we put our trial balance together, we list these accounts in that order and put the balances in the debit column on the trial balance. What comes after assets? Liabilities. So let's identify your liability accounts. Accounts payable is a liability. Salaries and wages payable is a liability. Notes payable is a liability. You have 3 liability accounts. What order would they be in? Well, notes payable is usually listed first. Accounts payable listed second. Salaries and wages payable will be listed third. All right. So if these were on a ledger, what side would these balances be on? Well, payables have credit balances. So all of these balances that you see for these payable accounts are all going to be on the credit side. So they would be on the credit side of the trial balance. Yes, question.
Why would notes payable be before accounts payable if accounts payable are due sooner?
Yeah, that's a good question. It is traditionally how, and there's a better answer to this than I'm giving you, but it's traditionally how it has been set up. Notes are always listed first. Like I said, but there's a better answer than that. I just don't have it right now. So the next set of accounts would be stockholders' equity. Common stock would be listed. Its balance is on the credit side. Dividends would be listed. Its balance would be on the debit side. Then the revenue account would come. Its balance on the credit side. And then you have two expense accounts listed here. Their balances would be on the debit side. So when you get said and done and you list it for Snogo, their trial balance, you would list the accounts in the best order that we had. That would be on a traditional balance sheet. And then if it had a debit balance, you'd put it in the debit column. If the accounts have a credit balance, you'd put them in the credit column, add them all down. Notice that the debit and credit balances equal, and thus you are all done with your trial balance. That's a trial balance. Questions?